Hi everyone, this is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He has over 20 years of experience as a financial professional. He's a Austrian school economist. He's a best-selling author of a number of books, including his most recent one, The Real Crash: America's Coming Bankruptcy, How to Save Yourself and Your Country. I found him through Crash Proof, and I also read Crash Proof 2.0. He released How an Economy Grows and Why It Crashes, and also the little book of bull moves and in bear markets. Peter Schiff, thank you for joining me today.
Oh, thanks for having me on your program.
Now, Peter, you're also, I'll add to your bio here, you're also president and CEO of Euro Pacific Capital, and you started your other companies, Schiff Gold, where you're chairman, and Euro Pacific Bank.
Yes.
Yeah, you've accomplished a lot since I first found your work. You've been really adding to your resume here.
Yeah, I'm constantly trying to expand, although, I am having more luck now expanding outside the United States. Euro Pacific Bank is the most recent example. We don't have as much regulation as we do here in the U.S., and so we are expanding more. We're actually hiring quite a few more people, too. If anybody listens to your broadcast, we are hiring customer service people. We need people who speak several languages. English, of course, need to be fluent in English, but other languages are important. Dutch, French, some of the Scandinavian languages we need. Also, commission salespeople, experienced financial professionals. We have a lot of clients, a lot of accounts that need help. And so we have lots of employment opportunities for people who are listening or interested, rather. They can go to careers at Europac Bank on my website, europacbank.com, and just kind of fill out some information. The only condition is you can't live in the United States. You can live anywhere in the world but the United States. You can be an American citizen. You just can't be living in the United States.
Wow, that's crazy. And the other condition probably is you probably don't want many hardcore Keynesians working for you.
Well, it's going to be better. They're going to relate more to my customers. But look, it's not all just Peter Schiff fans. I mean, we have Keynesian people that open up bank accounts with me. Offshore banking is popular. There are a lot of businesses that need the services that my bank provides. So they're not all there because they want gold or they want to, get into foreign stocks. But some of them are certainly there because they're followers of Peter Schiff. But a lot of them are there just because they need a good bank. And we provide a lot of services that a lot of banks don't. And we're very competitive in the prices that we charge. And, of course, my bank doesn't make any loans. It's a service-only 100% reserve bank. And so there are people in this day and age that find that feature attractive because they're not worried about, me doing something stupid with the money and blowing the bank up and losing their deposits.
Yeah, you're well capitalized. You're not running it like a hedge fund, it doesn't sound like.
Or a traditional bank. We're not making mortgage loans. We're not buying subprime debt. We're not, loaning money to Greece. So we're not all levered up. So, my bank customers don't have to be concerned about what might happen if there's a bail-in or, because we're not accepting those types of risks.
Now, let's get into the question. Speaking of risks, you have debated deflationists like Harry Dent who are convinced runaway deflation will be allowed by politicians and Keynesian central bankers. But when in financial history has deflation been allowed to occur for a prolonged period of time before massive interventions have happened?
Well, when you're on a fiat monetary system, politicians are not going to allow that. I mean, deflation is basically the market's solution to the inflationary boom. Central bankers can orchestrate these booms by keeping interest rates too low and printing too much money. There's all sorts of malinvestments, and the party inevitably always ends, and the market tries to restore balance so that you can have healthy economic growth. But politicians resist that. Now, under a gold standard, they can't. But under a fiat standard, there's no limit to the amount of money they can create, and so they can always prevent deflation by creating enough inflation to overwhelm those forces. And in fact, that's what I think is going to happen. But I do think guys like Harry Dent will be right if you measure prices in gold. So stock prices and other commodity prices, I do think will fall sharply if you're measuring them in gold. Right, so the price of everything can come down in terms of gold, but I think the price of everything will go up in terms of paper dollars.
Yeah, I don't think Harry likes gold very much, so I don't think he would admit. Have you gotten him to admit that the price of things will deflate in gold terms?
Well, I think he actually would agree with that, because he thinks probably gold will go down less than the prices of other things. And so that would still accomplish a reduction in the gold price of things. If, let's say the stock market went down 90% and gold went down 50%, that would still be a decrease in the price of stocks relative to the price of gold.
Yeah, that's interesting. I'm not sure the central planners will allow that for longer than 6 or 12 months. I mean, when I look at financial history, Peter, and you can tell me if you've found other things in your research, I've only seen deflation being allowed in the United States from really 1929 to 1933, and then FDR pretty much stopped it very quickly, with his team of Keynesians there devaluing the dollar against gold. I haven't really found any other times of really prolonged periods of deflation, and 4 years doesn't really seem like a super long time.
Well, I guess you didn't look very far. I mean, if you want to define deflation as a decline in consumer prices, which is the way most people define it. I mean, I look at it in terms of money supply, but generally today when people are talking about inflation or deflation, they're talking about changes in consumer prices. And if you look at the history of the United States, certainly of the 19th century, if you look at prices in, let's say 1800, and then you look at them in 1900, right, that 100-year time period, prices decline for the entire time period, with the exception of the years of the Civil War. But the general level of prices in 1900 were roughly half of what they were in 1800. So instead of prices going up over a century, they went down. Things became more affordable and less expensive. So the original history of the United States is characterized by falling consumer prices. In fact, probably the period of time where they fell the most was in the period from maybe 1870 to 1900. That was really the sweet spot of the Industrial Revolution. The Civil War was in the past. You had all sorts of industrialization and mechanization and automation, and you had the production lines and all the things that happened to make America more productive. Consumer prices fell for the entire period, and that is a sign of progress. That is the goal of an economy, to lower prices, because that's how you raise living standards. That's how you eradicate poverty, right, by bringing down the cost of production so that people can buy more stuff with the income that they earn or with the savings that they have. So that is a positive force, and we no longer have that. We now have a rising cost of living thanks to the Federal Reserve.
Yeah, the historical example you said, it was before the Federal Reserve. I'm sorry, I didn't put that in my question there. Yeah, I mean, after the Federal Reserve was created, there wasn't really that many examples of deflation being allowed other than really the Great Depression of 1920, which was a brief amount of time. But yeah, before the Fed, there was a lot of beneficial free market forces. I agree with you there. My next question is, in your new book, The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country, you talk about how wages and prices must be allowed to fall for the economy to heal itself. The bust is the cure for all these credit bubbles, and how creative destruction is necessary to fix the economy. Why won't Keynesian central planners allow wages and prices to fall then?
Well, because, the government is already operating at a certain level. It's made lots of promises. It needs tax revenue. Generally, governments want to maintain these higher levels of prices, because otherwise they'd have to cut back on, the promises that they've made. And so they don't want to do that. So they would rather encourage inflation so that they don't have to, honestly renege on their promises. They can just meet their promises with inflated dollars. And of course, you've got labor unions, and nobody wants to, concede or give up on their wages and accept the reduction, even if wages go down by 10%, but prices go down by 15%, workers are better off. But, they don't know that necessarily. What the politicians would rather have is wages go up by 10% and prices go up by 15%, because then they can pretend that everybody is better off because they get a bigger paycheck, right? Or, but they don't realize that bigger paycheck doesn't go as far. If they had a smaller paycheck that went further, because prices went down more than their pay, they would actually be better off. But the politicians are more concerned about perception than reality.
Yeah, I think that's really accurate. And then when they have, higher wages and prices, they can say, oh, look, the GDP, the businesses can raise their prices and this and that, when it's really just inflation, not, real productive economic growth and things like that. It's, phony because of the inflation, and the businessmen have to raise their prices to cover their increase in cost.
Yeah, the government creates the illusion of prosperity with these big numbers. Oh, the GDP is higher. Oh, your house is higher. The home is more expensive, and you think that you're better off. Looking at recent statistics, home ownership rates in America are at the lowest level since 1967, and they're probably going much lower. And one of the reasons is because houses are unaffordable thanks to the government, because they keep pushing up the price of homes. Home prices are rising much faster than people's incomes. In fact, real incomes are falling as home prices are rising. And now that rents are rising so rapidly, to the extent that you're renting, by the time you finish paying your rent and you pay your electric bill and you pay for your food and you pay for your insurance and your taxes, it's impossible to save up enough money to put a down payment on a home, even when the down payments are so low. But today, if you look at the homes that are being built, the average home, median home prices are about 10 times the median income. In 1950, it was only twice. So houses were only double what people earned, and now they're 10 times what people earned. And that shows you how much poorer Americans are. They used to work for 2 years to be able to afford to buy a house, and now they have to work 10.
Yeah, and one family income used to be able to easily support someone in the middle class, and people used to have savings and discretionary income. So there's a lot of examples, like you said, of that Americans have a declining standard of living. I think your father, Erwin Schiff, used to say the government breaks your leg and then hands you a crutch. I think he used to like saying that phrase. I think the government likes doing that a lot, where they claim that they're giving people false prosperity.
Yeah, because, when they break your leg, they hand you a crutch and they say, without me, you couldn't walk. The crutch is very visible, and once you're crippled and you depend on a crutch, you're grateful to the politician for handing you that crutch. But when they break your legs, they do it in a way that's not obvious, because you don't realize that it's the government that's crippled you. They do it, they have somebody else do it, and so you don't see the government as being responsible for your being crippled. But what you do see in a very big way is that they hand you the crutch. And that's how they win your votes, and that's how they get your support, which is why government wants you to be crippled, because they want to be able to dangle that crutch in front of you, and they want you to feel threatened by anybody who's going to take away that crutch, right? Once they create dependency, they capture you as a voter, because you're depending on government, and so you're not going to vote for anybody who's not going to continue to provide that support that now you badly need. But of course, the shabby secret is that without the government, you would have two good legs and you wouldn't need a crutch.
Yeah, and now we have politicians, keep on promising more. We have, guys like Bernie Sanders and Hillary Clinton who keep on saying that, oh, we're going to give you more. Oh, you're entitled to healthcare. Oh, you're entitled to cheap education and all these other things. I don't know how we can afford any of these things without, more massive amounts of new inflation.
Yeah, it's interesting that the two most popular candidates now are a socialist and a populist. And, people are looking for scapegoats. People are looking for easy answers, because they know that the economy is in lousy shape, that despite the media's rosy assessment, that their real lives are getting worse, that their standard of living is going down, that their cost of living is going up, that they're falling further and further behind. You've got older people who can't afford to retire, so you've got labor force participation at record highs for people in their 60s and 70s. On the other side of the spectrum, young people can't get jobs. You got the record low labor force participation for people in their 20s and 30s. They're drowning in debt. We've got $1.4 trillion in student loans. They've got worthless degrees. They're living with their parents in their basements. This is a big declining living standard. People are working part-time jobs because they can't get full-time jobs. You got so many people now working minimum wage. You got people trying to raise a family on minimum wage jobs, and now they want to raise the minimum wage to $15 an hour. Look, we should have kids 15, 16-year-olds should be working minimum wage jobs. In fact, we shouldn't even have the minimum wage, so more teenagers can be employed. The fact that so many people in their 30s and 40s are trying to get by on jobs that were designed for teenagers, where are the jobs that adults are supposed to have? Where are the good-paying jobs that you can support a family on? They've been destroyed. And the solution isn't to force companies to pay full-time real wages for entry-level jobs that should be done by teenagers, because they're going to end up being done by robots.
Yeah, exactly. There's going to be unintended consequences to all these politicians trying to either force the minimum wages higher, either the automation, like you said, or businesses are going to close down, or they're not going to hire as many. They're not going to expand when they have the option to do so. The other one is, that business person who I think raised everyone. He took a huge pay cut and he gave everyone $70,000. That was kind of right out of Atlas Shrugged there with the 21st Century Motors. Remember that from Atlas Shrugged?
Yeah, look, I talked about that guy on my podcast. As soon as it happened, I said, look, this thing is going to fall apart. And in fact, it fell apart even quicker than I thought. The firm is teetering on the edge of bankruptcy now. Look, it was a complete disaster. I mean, he basically wanted to pay his employees like he was running some sort of socialized commune, from each according to his ability to each according to his needs. He was going to pay all his employees a minimum of $70,000 regardless of what their productivity was or their contribution to the firm. And so the people that were barely contributing, had a windfall. But the harder working people were very resentful of the fact that people with fewer skills and not working as hard were getting the same pay that they did. So the best workers wanted to quit, and more, marginal people wanted to join the firm to parlay on this $70,000, minimum salary. So the whole company's probably going to go under, and so everybody's going to earn nothing. And so at the end of the day, he would have destroyed all the jobs that he had formerly created with this ridiculous notion. And so instead of the people who used to be earning, $30,000 a year, they got excited about the prospect of earning 70. Now they're going to earn zero.
Peter, last week you put out an interesting piece on the Euro-Pacific website, and it caught attention on Zero Hedge too. It's called "The Fed is Spooking the Markets, Not China." Well, why do you think then that the mainstream financial media and Wall Street is so quick to blame China then for the general stock market indices starting to go into a correction, potentially a crash?
Well, it's a much more palatable explanation that doesn't raise any eyebrows with respect to underlying problems in our economy. It's much easier to pretend that everything is great here and that the markets are simply overreacting to some problem that's happening halfway around the world, right? That's easier than acknowledging that the U.S. stock market is a bubble and the air is coming out of it, and it's the Fed that's threatening to prick this bubble by raising interest rates, even though the air is already seeping out just on the discussion of a pin.
Yeah, and xenophobia seems like a common tactic. Politicians have been using it for thousands and thousands upon thousands of years to, scare people, always blaming problems on the economy or other things on foreigners. So I guess it would make sense then that when the markets are dropping, I guess it would make sense to blame foreigners too.
Yeah, and again, it makes it easier for people not to worry. Hey, don't panic, don't sell your stocks just because of some problems in China. But the real problem is in America. In fact, the Chinese could just as easily, in fact, more correctly, blame their market sell-off on us. In fact, I think the entire global economy, stock markets around the world are falling because people believe the Fed's bluff with respect to raising interest rates. Everybody is preparing for a tighter monetary policy in the United States, and that is what is undermining emerging markets. It's what's pressuring commodities. It's what's caused the dollar to rise. We are creating problems around the world. Maybe some of those problems are reverberating back to our shores, but the reality is the U.S. economy is extremely weak. We're not going to be able to raise interest rates without creating another financial crisis here in the United States. That's what the world doesn't seem to understand. And so rather than beginning a new round of monetary tightening, right, I think we're going to be launching quantitative easing 4. I think, we're going to be doing even more money printing. I think interest rates are going to be staying at zero for a long time.
Now, with this extra volatility in the regular markets, do you expect some money then to start moving back into gold in the near future then?
Well, it's already started. I mean, gold has moved off the lows. We were down about 280-ish on the lows, and now we're, just above 320. We are off the highs of about 360. That started with the big drop in the stock markets that I believe is continuing. But you still have the specter of higher rates, and now people are arguing, well, is it going to be September? Is it going to be October? Maybe December? But they're only quibbling about the when. The if is a foregone conclusion. Everybody believes the Fed's going to raise rates, and that false belief is keeping a ceiling on the price of gold. But when people realize that that's not going to happen, then I think the gold price takes off. And I think that my most recent article that I just wrote that's up on my website today about quantitative tightening, right, which several of the larger banks are beginning to write about, and this is the idea that foreign central banks are going to be unloading their treasuries that they've been accumulating for the past 5 or 6 years. You're talking about 12 trillion, I think, in foreign reserves, the majority of which are parked in U.S. treasuries. And those emerging market economies, including China, were buying those currencies, those dollars, to keep their currencies from rising. Well, now their currencies have tanked. They don't need those dollars anymore. Not that they ever really needed them, but now the justification for buying them no longer exists. In fact, there's a powerful argument for selling those treasuries. And I think if the world engages in quantitative tightening, the Federal Reserve is going to be backed into a corner, and it's going to be forced to do quantitative easing. Because if the Fed doesn't buy all those treasuries that the rest of the world is looking to sell, who will? And at what yield? And the problem is, if bond yields rise sharply, the U.S. economy is going to implode.
Now, it seems like you mentioned a number of catalysts for the gold price and silver price to eventually go higher. Do you think there's any other major catalyst that will launch gold and silver back to the higher levels of 2011?
No, I think that's going to be the catalyst. It's going to be a change in the perception of the trajectory of Fed policy. That's all it is. Gold is an alternative to dollars. It's real money, and the dollar is a substitute. And either people have confidence in the dollar or they don't. Right? They have confidence in the Federal Reserve or they don't. And if they have confidence, they buy dollars. If they don't, they buy gold. And I think right now people are being foolish and confident. When they become smart and lose that confidence, gold's going a lot higher.
Yeah, that makes a lot of sense to me. And, maybe for the short term, we may see some money from other foreign markets continue to go into the U.S. bond market if they do raise rates or something like that. But it would only be temporary. It would not be a permanent thing. In your opinion, since you do sell bullion, do you think it's highly likely in the future the U.S. government will institute a windfall profits tax on physical gold or outlaw U.S. citizens from owning gold like FDR did in 1933?
Well, I doubt they'll do anything exactly like FDR, because the rationale that existed back then doesn't today, because we were on a gold standard then. Almost all Americans own gold. Right? Gold was circulating as a medium of exchange. So Roosevelt wanted to devalue the dollar, which, prior to his confiscation of gold, you bought an ounce of gold for $20. But after Roosevelt seized the gold, he devalued the dollar, and then you needed $35 to buy an ounce of gold. So Americans gave up their gold at $20 an ounce and had the government revalue it to $35. So and Roosevelt needed to seize the gold in order to do that. So today there is no gold standard. The vast majority of Americans don't own any gold, other than, what little bits they might have in their jewelry, or if they have any in their teeth, or maybe in a little tiny bit in a cell phone or something. But they don't have any gold, so we don't have to seize it. Those few Americans that own gold, will the government try to seize that gold? They don't really have to, because they could just print money and seize everybody else's purchasing power. But windfall profit tax, yeah, that might be more likely. The government has a history of that kind of stuff. They certainly did it in the oil industry when the oil price went up. But I know, when the oil price comes down, they never want to, give that money back. But look, the government is going to try to tax. Inflation is a tax. People need to be worried about that, and that's one of the reasons that people should own assets offshore. People should own gold, privately, own your own gold in your own possession. And then if the government's going to tax you, well, they got to find you, right? And of course, if you end up using your gold, if you just barter it, it'll be harder for the government to know that you've disposed of it at a profit because you didn't actually sell it. Nobody issued a 1099. And so I think if it all hits the fan, I mean, people are going to have more to worry about than the IRS catching them that they didn't report their windfall profit on their gold. Because, of course, in many respects, it's not going to be a windfall, really. It's just going to be that you protected yourself against a loss. It's really you avoided a massive loss by owning gold. You didn't reap a windfall. It's just that everybody else who didn't own gold went broke, and you were smart enough to protect yourself, and the government shouldn't tax you for being smart.
Yeah, I agree with that, but just because you and me agree with that doesn't mean that's the way the government sees things, because they're all, Keynesians and Marxists and things like that. They want someone to blame it on when they screw up. Yeah. They seem intent on, just grinding the middle class in the United States to death with inflation, which is, the stealth tax, the indirect tax, and then actual taxation then on so many different things, whether it's higher property taxes, the Obamacare tax, the healthcare tax, and so many other things. Now, in terms of people being able to move gold outside the United States, you do have Euro Pacific Bank, and you do have a gold-backed debit card. Can you tell our listeners more about that?
Yeah, sure. I mean, unfortunately, though, American citizens cannot open up accounts at my offshore bank, but everybody else in the world can do it. I mean, America is the only country where we won't accept accounts, and it's unfortunate, but it's because of the rules that the U.S. government would place on our institution were we to, accept Americans. And so we just can't afford to do it. But when I set up my offshore bank a few years ago, one of the things that I had always wanted, and I even wrote about this in my book, Crash Proof, which came out in, 2008, was that one day I believed that banks would treat gold as money. And, one of the problems with gold and people say is, well, how do you spend it? I mean, how do you carry it around? If I have a bar of gold, how do I use it in commerce? It's much easier to use paper money than gold. And I always said, well, that's not the case today, because if you're talking about the way most people spend, they don't spend paper dollars. I mean, I rarely use cash. I almost always use a debit card or a credit card when I want to buy something. And I always said, well, yes, your bank can have dollars, but it can also have gold. I mean, the bank can hold any asset it wants, and you can spend it down with your debit card. I mean, you see that when you travel. If I go to Europe and I want to buy something and it's 100 euros, I don't have any euros in my bank account, but I can still buy something for 100 euros because my bank will sell my dollars and buy the euros to cover my trade, my transaction. Or I can put my ATM card into a European ATM, and I can withdraw, 100 euros, 200 euros, but my account has dollars. So I said, well, why can't a bank do that except hold gold, right? That way individuals could put themselves on a gold standard on themselves, not wait for the government, but they can still transact with the fiat world seamlessly, because the merchants don't know that you're spending dollars, just like when I go to a store in Europe, the store doesn't know that I have dollars, because they still get euros. So I did that for my bank, and I set up a program. Now, because of the software, I didn't have a true debit card. I had a prepaid card, right? And so the way that card works, and I do it with silver also. If you have $5,000 worth of gold at your Pacific Bank, and you want to buy something for $500, you would go into your account and you sell $500 worth of gold, and you can do that 24/7. And then you load up your debit card, and now you have $500 in cash on that debit card, and now you can go out and use that debit card to buy something. And since I've done that, a couple of other companies have copied me. I started 3 years ago. Most recently was this Canadian startup, BitGold. And, when they first started up, they were talking about how they were going to be the only platform that would allow their customers to spend from their gold account, which wasn't true, because I was already doing it. But they were pretending that their debit card was going to somehow work differently. But they finally launched it, and it works exactly the way mine does, in that it's a prepaid card. But I have spent now about $1 million updating my software, and we've done that for a number of reasons. But what I did is I basically rewrote the code so that my banking software will now look at gold as if it were a currency. So it's going to treat gold the way it treats dollars or euros or pounds or yen, which means that soon my bank will actually be offering true debit cards. We'll be the only institution to do that. So I'm going to eliminate the middle step that I have now or that BitGold has, meaning that if you have $10,000 worth of gold and you want to buy something for $500, you just buy it. You don't have to load your prepaid card. That the minute you use your debit card, my bank will recognize that and it will liquidate enough gold to cover your transaction automatically in real time so that you won't have to do anything. Right? You won't. There is no second step. So literally, my bank customers will be carrying with them at all times all of their gold. Right? You'll have access to it instantaneously through your debit card, either to withdraw cash, to spend it. But, one of the interesting things, and maybe the guys that are investing in BitGold don't understand this, but, we've had gold-backed debit cards for years. Very few of our customers use them to buy things. My bank customers, we also give them debit cards in dollars and pounds or euros. That's what they spend. Right? Most people who are smart with gold at 1,300 or not 1,300, 1,120, right? They don't want to spend their gold. They want to save their gold. They want to spend their fiat. So in general, my clients aren't going to be using these gold-backed debit cards to spend gold for many, many years, right? But it is there for an emergency, right? If all of a sudden you need some money and the only place you can get it is by selling some gold, you can do that, right? By having my debit card, you have immediate access to your gold should you need it, but you're only going to do it probably in an emergency because there's no reason to use your gold to buy a cup of coffee, right? Why would you do that? Use your dollars or use your euros because they're just going to lose value over time. So buy coffee with that, right? It's a Gresham's law, right? You hoard the good money and you spend the bad.
That's a really cool technology, Peter, with this gold-backed debit card and able to spend silver. It's too bad American citizens don't have the option to do it. It's just really crummy that, that's the way life is right now.
Yeah, what we will, look, we're going to be doing other things in the future. I think we're going to be coming out with a digital currency backed by gold reserves held at my bank. And that digital currency, it will be like Bitcoin, but it won't be a Bitcoin, but it'll be something that utilizes the blockchain. So it will be able to have the functionality of Bitcoin, but the reliability of gold. And that's really what people want in a digital currency. They don't want something that has no intrinsic value that could be worthless one day. That's the problem with fiat money. They want real digital currency backed by something real like gold, and we'll have that. And another thing that we're going to be doing one day, I thought of it years ago, I just haven't spent the money to roll it out, is a platform where we'll be using gold kind of the way PayPal uses dollars, where my bank customers will be allowed to buy and sell with one another with payments going directly from buyer to seller in bullion. So if somebody has an account at my bank and a merchant also has an account at my bank and that merchant wants to offer his products for sale in gold, right, to be paid in gold, then I can effect those payments from one bank customer to another. Going outside of the banking system, it would be a direct transfer because I would simply change the ledger who owns that gold, right? Because it's all stored in the same vault, and I can just move it from customer A to customer B. And that's something that I'll be rolling out in the future. I know that BitGold is already offering a service like that. And the reason I'm not doing it now is because nobody really wants it. Very few people want to get paid in gold. They want to get paid in dollars or euros or yen. So that's what the debit cards let you do, right? The debit cards allow somebody to own gold, but pay in any currency the merchant wants, right? So that's a lot more practical, and there's a lot more demand for that. But as demand grows, as people lose confidence in fiat money and more people want gold, well, then it'll make sense for me. I'm a private company. I'm not a publicly traded company that can afford to lose millions of dollars a month, right? Because I'm funding my company, and I need to make a profit. And my bank does make a profit, and my profits are rising. So I have to make decisions on what products I want to roll out based on the actual demand for those products, because I'm not willing to lose money. But when you have a publicly traded company that has access to shareholder money and they're willing to just, throw away millions of dollars or tens of millions or hundreds of millions, we'll see how much money people are willing to buy, when they, buy these offerings of overpriced stock. So if you don't really care about making a profit, you could do a lot of things that businesses can't do that actually want to make a profit. But, at some point, I do believe there will be real demand for, a PayPal in gold. And believe me, I'll be out there doing it, and there'll be lots of people doing it. And in fact, I think that in the future, more banks will do what I'm doing. The reason that I'm the only bank, really, that does these gold-backed debit cards is because so few people actually want them. But that's how capitalism works. If lots of people around the world were smart enough to demand gold-backed debit cards, profit-seeking banks would supply them. Institutions would supply them. I mean, there is no barrier to entry. I mean, any bank that can issue a MasterCard or a Visa, any bank can back it with gold. I mean, if they can hold dollars, if they can hold euros, if they can hold yen, there's nothing that stops them from holding gold. I mean, it's easy. If I can do it, anybody can do it. It's just that they don't want to do it. Yeah. But I think it makes a lot of sense, and I think more and more people are going to want to do it. And yeah, I wish I can offer it to Americans at my bank, but hey, it's a big world out there, and so I can still offer it to everybody else. And the website there is europacbank.com. EUROPAC bank.com, if anybody is interested in these accounts.
I have one more question, Peter, before I let you go. My last question is philosophical. Why do you think more Americans have read and respect the works of Marx and Keynes compared to the work of Hayek, Mises, and Rothbard?
Well, I mean, there's a lot of explanations for that, and there's a lot of things that Americans haven't read and that Americans aren't exposed to thanks to the government schools that most Americans are indoctrinated in. But, the works of Marx are probably more palatable to the average guy as far as, promising something from government or something from nothing, trying to justify your own, let's say, if you haven't succeeded, it's not because there's anything wrong with you, it's because the system is rigged against you. If somebody is rich because they exploited you, they're a bad person. It really plays into people's envy and their insecurities, and it's much easier. The masses are more likely to want to accept that, because most people don't succeed. They don't start a business, they don't invent something. They don't create businesses or products or employ people. They just consume what other people produce, and they just take a job that somebody else creates. But in the process, they become envious, jealous of people who are more successful than themselves. And, the philosophy of Marx, makes you feel better about your own lack of success. And it thinks, well, I'm not successful because I'm not mean and I'm not greedy and I'm not exploiting people. And it also talks about, unjustly rewarding people by stealing from others who are now perceived to have gotten lucky or to have been exploitive, and say, hey, let's take those ill-gotten gains away from the rich and distribute it out to the more deserving masses that are embracing this ideology. But the people who actually benefit most from capitalism are the middle class, the average people, the poor. I mean, the rich are going to do well under any system. It's the masses that have the most to gain from a free market economy, because, what people need are lower prices and more abundance. I mean, it's not going to matter to a guy like Bill Gates if the price of computers goes down or the price of cars goes down or the price of he's going to buy whatever he wants, even if it gets more expensive. But you have a lot of people who need prices to come down so they can afford things. There are a lot of people that need jobs. Bill Gates doesn't need a job. If he doesn't have to work, he's fine. But if you're a poor person, you need a job, you need a growing economy, you need someone to provide that job, and it's not going to be government. So it's ironic that the people who benefit the most from capitalism are the ones that are most threatening to destroy it. They embrace socialism because it sounds good, and politicians embrace it too because they all want to play Santa Claus. They all want to promise something for nothing. They all want to buy votes. And, if you embrace free market capitalism, you can't buy votes because, all you're promising is freedom. You're promising to leave people alone. And leaving somebody alone to succeed on his own merits and just simply getting out of the way, doesn't generally get you as many votes as promising to steal money from somebody else and give it to the person who's voting for you. Because they can see the immediate impact of that, right? They're the recipient of that stolen money, and they want that right away. Being able to benefit down the road from freedom and the prosperity that freedom may bring, that's a concept that isn't as readily grasped by the voters who are, looking at a 30-second spot or reading a bumper sticker.
Great answer. I mean, people want something for nothing, and most people either don't understand or they refuse to acknowledge that taxation is theft. So, I mean, taking, more and more from the productive every year and redistributing it, we're going to end up with an economy that's in the tank there and more people dependent on government then. So it's like a negative feedback loop where, government keeps making more promises that it can't deliver on, and they have to increase taxes and increase inflation, and that's why we're in the mess we're in.
Yeah, and I don't know why people can't equate taxation with theft, because most people would agree, almost everyone would agree, that it's wrong for an individual to just go out and steal from somebody. You just can't see somebody who has something that you want, somebody that has more money than you, and just go and take some of their money for yourself, right? Everybody would say, well, that's wrong, right? I can't just take something that belongs to somebody else. That's not right. That's not fair. If I want something, I've got to go out and earn it myself. If somebody else has more than I do, well, that's private property. Most people are going to agree that you can't do that. And most people would agree that a group of people can't, get together and rob from somebody or beat somebody up and take their stuff, right? So one person can't steal from somebody, a group can't steal from somebody, but then all of a sudden, if the group wants to vote to have a third person go and steal that money, all of a sudden it's okay. All of a sudden, if you have an election and the majority votes to steal money from the minority, then all of a sudden theft is legal if it's legitimized by an election. But look, if thieves want to vote for somebody to steal money from their victim, it's still a crime. It's still theft. If money is being taken from somebody against their will, it's not right. Now, in some cases, taxation is legitimate if the money is used for the general welfare, for the general benefit of society as a whole, right? Because then everybody benefits from the taxation. But where taxation becomes theft is when the government specifically takes money from one person and then gives it to another person, right? One person loses and one person benefits, right? Transfer payments, taxing one person and then giving the money to another person, right? That's theft. Taxing everybody for the benefit of everybody equally, right? Well, that's a legitimate way to raise money for government. But what the U.S. government does today is nothing more than legalized theft.
You're preaching to the choir. I completely agree with that. Well, I found you through Crash Proof. As the economy was collapsing, I was a stockbroker and I was looking for answers, and I wasn't getting them on CNBC or the normal, Wall Street mainstream financial media publications. So it was a real breath of fresh air to see you, fight those commentators on CNBC and I read Crash Proof and all your other books. So I just want to thank you. Keep up the great work. I enjoy your video blogs on the market, and please tell our listeners where they can find more of your work and your other companies.
Well, sure. First of all, I'm on the internet all the time. I do podcasts and video blogs. My video blogs are on my YouTube channel, Schiff Report. So go, subscribe to my YouTube channel, schiffradio.com. Also, I do my podcast there, usually a couple a week. Schiffradio.com is that website. Then, of course, I've got a lot of books. You read Crash Proof. My most recent book is The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country. I just fully revised and updated that book. So that's for sale. Also, if people are interested in my investment services, of course, if you don't live in the United States, we've already mentioned Euro Pacific Bank. If you do live in America, you can work with my U.S. broker-dealer, Euro Pacific Capital. It's europac.com, EUROPAC.com. And there, we open brokerage accounts, manage accounts. We help our clients invest in global markets. And it's a great time to do that now with the dollar as strong as it is. All of the stocks that we love in places like Switzerland or Singapore or New Zealand, all these stocks are on sale now because of the strong dollar. I think this is another bubble in the dollar, like the late 1990s. I think the bubble is going to pop. I think the dollar is going to crash. I think all this hype about a strong economy and higher interest rates is all talk. It's all misplaced, but it's all caused the speculators to buy the dollars. But I think they're going to get clobbered. I think the bottom's going to drop out of the dollar when people figure out how much they've got this thing wrong. And so it's a window of opportunity for smarter people to use those overpriced dollars to buy foreign assets. And also, we mentioned precious metals. SchiffGold.com is my bullion company. We sell physical precious metals for delivery. And I recommend, again, that you have some of your gold in your possession. Don't keep it in a bank safety deposit box. Who knows if you'll ever get it out. Keep it with you. And, we have the lowest prices pretty much on the internet and we don't rip people off with these, phony numismatic coins. We have very low markups at schiffgold.com.
Yeah, gold stocks, silver stocks, oil stocks, foreign stocks, that's where I see the value in the markets right now in terms of the valuations. I mean, a lot of the major U.S. ones, they were long overdue for a correction, and yet, the people on Wall Street keep saying, oh, it's going higher, oh, the fundamentals of the economy are great. I mean, it was obvious it was overdue for a correction in the near future.
Yep, absolutely.
Okay, great. Well, thank you again for your time, Peter, and hopefully we can speak again.